We are back. I'm your host, Barry Waxler, here with the always lovely and talented Andrea Kay, the always incredible Urban Miaris, and this is the first time in the last 2 years. It's really not talking about me, but we get to talk about me.
Yay!
you know, the whole thing started with you and your endeavors to write a book.
Yeah.
That's how the radio show came about.
Right. So
we've hinted. We've talked a little. We've teased.
Yeah.
We've given excerpts.
Well, this, you know what? My life has been, modeled after my father, who did everything for everybody else. Took care of my mother for 50 years, from multiple sclerosis and Parkinson's and diabetes and everything else. Just sat there and took care of her for years and just taught us, the world's all about you, not about me. Right. So now I've got to flip on all that. And I don't want to say it's talking about me, but it's talking about how, giving back, talking about the book. So, before we get started, I'll just make this offer, for anybody right now, today, within the next 24 hours. So anytime Wednesday, I'll open the door on Wednesday. If you want to call me, email me, text me, okay? I'll give you my cell phone so you can text 619-549-5920. Send me a text with your mailing address or email address if you want a hard copy book or if you want a soft copy book. Just let me know which, and I will get you the book for free for 24 hours only.
All right. So if it's a 25th hour, you're out of luck.
That's right. That's
okay.
Like you're going to be paying.
When I first read Barry's earlier draft of the book, before it got all the approval and was allowed to print it, I told Barry, this is book number 1. This is edition 1. The way things are today in technology and all the different types of ways you could spend money and lose money.
Yeah.
I could see this going on and on.
Yeah. Well, the book is all about what I call a principle called found money. Okay, what's found money? Okay, well, you can get found money, finding a $20 bill somebody dropped on the street. That's not a great way to do it, but, you can do it. That's found money.
Right.
It's money that you don't have anybody to give it back to because you just found it and what have you. Okay, now you could always go over to Urban and give it to a charity, but that's besides the point.
Now, why choose that as a concept for the book originally?
Well, it's because that's, let's put it this way. When you get into financial services as a career, you have, choices to make. Like anything else in life, life's all about choices. So the choice was, do we want to go out and work? Who do we want to work with? Okay, everybody wants to work with the affluent sector, the people at the top of the penthouse, and they have all the money. But then you got to fight the battles, because if they have all the money, then they have all the advisors, and how do you really break in? How do you do that? It's a market of who do you know, not how can you help? Okay. Mm-hmm. And then, I looked at the other side, and you have the world in poverty as well. And when you see people in poverty, your heart goes out to them. But how much can you really do? And that's what the nonprofits like Urban's is out there for. Urban's is out there for a little different reason. But there are a lot of nonprofits out there like mental health systems, like Community Resource Center. They're all out there to help the people that need help desperately because they've hit the bottom. Okay, I can't really help the people on the bottom other than going and helping those that help them.
Right.
Okay, if that makes sense.
Right.
I can help them. So I had to find the sector of people that were so busy trying to either feed their families, make money, do what they do. How many people are out there working 40 or 60 or 80 hours a week, and then they come home to their wife and kids and they want to they just want to spend time with them.
Right.
Do you have time to learn how to manage money, how to manage assets, how to just take care of your own family? Most people don't.
Right.
So that's what Stop Bleeding Cash is all about. Okay, if you're working so hard for your money that you don't have the time to figure out what to do with it. Okay?
And then if you don't protect it,
Well, protection is another part. That's asset protection. That's a whole different aspect. What I'm talking about here with Stop Bleeding Cash is, find the money that you don't even know you have. Okay? In other words, find a way to make things tax deductible that you're not getting a tax deduction on today. Find ways to create things. And I'll go back. We had a guest on, a good friend of mine, okay, a few weeks back, Ron Samuel.
Yeah.
Okay. Ron's a CPA. Mm-hmm. He comes from a background of working with some of the best, accounting firms in the city. Went independent a good number of years ago and has built his own company. Okay. And I looked at him and I said, well, Ron, we've worked together with this client and this client and this client. Okay. And why is it that we can do better together than we can do independently? A term coined by that I heard first from a guy named Art Bartlett who started Century 21, called synergy. Where two minds working together can accomplish infinitely more than two minds working apart. Mm-hmm. Okay, and I took that to heart. I was a young man at the time, right? In any case, what we do with financial professionals is we team together. I get to know so much more about the family. Think about the CPA's life. And I know I'm leading into a lot of stuff in the book, but think about the CPA's life. The CPA works from, if it's January to April, they're 7/24. They are just putting in the time, crunching the numbers. How much time do they have to spend with their clients? They don't have a lot of time to spend and learn. So they basically say, bring me your shoebox full of receipts and any comments you have, and we'll fit it into the lines. I have the time to get together with clients and sit there and get to know them, know all about them, and find all the tools and how to, put that together. Do I place that in the line item on the tax return? No, that's what a guy like Ron does. And so we design all the systems that fit for the individual client. That's how we find lost money. Okay. So, it's all about that. And we work within taxes, home loans, credit card debt, healthcare expenses, business expenses, insurance premiums. Okay. We are somewhat the generalist. We do have our specialties, I've had a license to sell life, health, and disability insurance since 1986. I think 1992 I got all my securities registration. Mm-hmm. So, we've been doing that for a lot of years. And we basically find solutions that the accountants and people don't have time for. It's like the tax credits we talk about. Mm-hmm. Okay, we talked about this on air with Ron. How come accountants can't find all the tax credits for you? Okay, because it's a specialty that the accountants don't have the time to get in and see, oh, well, you run a beekeeping business and you do this and this and this and you're qualified for that. You've hired veterans. Whatever the situation is, the accountants don't have the time to do that. They only get snippets of the time that you spend with them on the phone or in person. So that's what we do is we get to know you, know what you do, how you do it, and we know how to look at your behaviors, your financial behaviors, mm-hmm. and teach people how to put those behaviors in place so they bring money to your table. Do you know what the number one biggest expense anybody ever has is in their life?
What?
Okay, I'll tell you in a minute. Okay. You're listening to Close Up on Standing Up Business here on KCBQ, streaming live at AM1170theanswer.com. Give us a tweet at CloseUpSD. Email me at barry@closeupsandiego.com or find our page on Facebook. We want to hear from you. I'm your host, Barry Waxler, here with the always lovely and talented Andrea Kay and the always incredible Urban Miaris, and we are talking about my book, Stop Bleeding Cash.
Ta-da!
Yeah. Drum roll.
Yes.
Da-da-da-da-da.
Hey.
So basically, you're a physician who specializes, because like physicians specialize, orthopedics,
right. Well, you
or
have
pediatrician.
You have your generalist who
right.
looks and says, I think there's a problem, okay, and then sends you over to specialist to
Mm-hmm.
to narrow down the problem.
Right.
Okay. We are the general practitioner. We're really good at certain things, but mostly we're good at finding where the problem lies and going out to the specialist to get the problem fixed.
and then continuing to stay involved as the GP.
Because
you're still the family physician involved in the healthcare. You're just bringing in the specialist.
Absolutely. Somebody comes down with a cold. You go find some antibiotics. You get the cold fixed. Next thing you know, they have another problem. So the things keep coming up. So the key is partnering together the right professionals to come up with where's the problem and how do we find the solution. And it's not always a problem that's evident. If you break a leg, you got a broken leg, you go get it fixed. But what happens when somebody gets sick, they come down with cancer or something like that, it takes a long time for things to manifest and to find it.
And it takes the right person to accurately diagnose it, to really get inside to the tests, the inspections, and come up with a diagnosis.
Yeah. So that's what we do is we identify, we bring out everything to light there is. We look at how people operate, how they run their family, how they run their business, how they run their job, whatever it happens to be in their situation. And what we find is that everybody is uniquely different. So one of the phrases that I coined in the book, took me a while to get this through compliance. Okay. They said, no, we don't like that phrase.
Oh, is it naughty?
No.
Okay.
It's just, compliance is so tight. We won't go into that. But anyway, it's a phrase called spendability. How do we maximize the spendability of your money? Okay. Now, if you go to any dictionary, you won't find spendability. But if you go to Stop Bleeding Cash, you will.
Well, does it mean liquidity? What does it mean?
No, it means not liquidity. It means maximize the spendability of your money. Okay. Now, if you have $1 and you're going to pay tax on that $1, you're going to get 50 or 60 or 70 cents, whatever that number is. That's how much money you can spend. That's your spendability on that $1. What we want to do is we want to find more deductions, more credits, more ways to generate your money so you can spend more of that $1.
So the $1 goes farther.
Right. And when I'm looking at Urban and Andrea in this case, okay? If I look at Urban, I'm saying we maximize the spendability of your $1, so you have 90 cents instead of 80 cents or 90 instead of 70 cents. And I look at Urban, I say, and Urban will look at me and say, good. Now what can we do with that $1 to make it worth $1.10, $1.20, $1.30? Okay? Then I look at Andrea and I say we go maximize that $1 to give you 90 cents, and then you're off to Nordstrom, okay?
Well, yeah. I mean, but I got to add a whole lot of other 90 cents.
That's right.
to get to that shoe department.
That's right. Well, all it takes is more zeros.
Yes, exactly.
Okay? So we do that. So we teach people how to maximize the spendability of their $1. Everybody's $1 is different. Everybody's tax situation, everybody's interest is different. We have a whole lot of things we do with people, and we utilize all the tools at our disposal to do it.
Now, what details does the book give in regards to those ideas and concepts and applications?
Well, it's interesting, and this is something I learned a long, long time ago in this business. When we deal with people and we deal with individuals, every situation is different. So can I give you all the solutions to the problem? If I try to give you all the solutions in this book, you'd be reading it forever. Okay? Because solutions differ from one family, from one individual to the next, from one business to the next. So the solution is completely different from two identical people standing next to each other. One's going to go one way, one's going to go the other way.
Right.
So what we do is we identify the areas of concern.
Okay.
Okay. Again, it goes into taxes, home loans, credit card debt, healthcare expenses, business expenses, insurance premiums. Inside all that is retirement plans. I give you stories of how we've helped people along the way. Okay. Give you an example of, I mentioned this in an earlier interview.
Now, don't give any secrets away, because we want them to read the book.
That's right. No. So I had one of my guys, I remember Scott McKee.
Yeah.
Okay. Scott is our third-party administrator for a lot of the qualified retirement plans. And he called me up and he said, well, we've got this other guy, I won't mention the name, who I've dealt with before, and he wants to buy this apartment complex. And said, well, if we go in and we do a self-directed IRA, the IRA can loan $600,000 on the $2.6 million property and blah, 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 blah. And I said, yeah, but if you do that, you're subjecting yourself to, a substantial amount of risk towards self-dealing issues. Okay. And, the IRS is not so much into trying to expose the problems on, when you're self-dealing on a $10,000 or $20,000 deal. But when you get into a $2.6 million deal, their eyebrows go up.
Yeah, they're very interested.
Yes. So Scott went to the best custodian. He went to an attorney that we've both dealt with for years. And, the way the client wanted to do it kept going in the wrong direction. And we said, well, Barry, would you talk to him? So I said, sure. So, and I'll give the solution on this one. Okay. The solution was really, really easy. The guy had $1 million plus in his IRA. He wanted to take income off of the property. He wanted to take $100,000 a year income because the property was generating that by taking $600,000 and put it down. He did not want to cash out the IRA and pay taxes on $600,000, yet he wanted to have the property get him the income. Okay, and if we did it the way they were talking about, again, there's self-dealing and it could blow the whole thing up. So I said the answer is really, really simple. Have the retirement plan get the non-recourse financing directly to the retirement plan. Now, how many people know how to do that?
I don't know.
How many financial planners know how to do that?
I don't know.
Okay, not a lot. Okay, and my ultimate goal in doing what I do is having people say, why didn't my advisor tell me that? Mm-hmm. Okay, because once I know that, I know I've got the aha moment there.
Right.
They finally have the light bulb go off.
Right.
Okay, so I got the real estate professional. I got the client and me on the phone together, and we talked about it. And the real estate professional already knew the mortgage company that they wanted to talk to, and I had already talked to the mortgage company before. So we all connected. All we needed to do was put the program in play, and the client said, well, I really want to be conservative, so can you connect me up with a law firm that'll help us sign off on this, put an opinion out there. Mm-hmm. Okay, so that was easy. Strazzeri Mancini, again, that's the benefit of being on the radio and meeting all these great people.
Well, fantastic.
Yeah. Okay. Let's answer that question of the break. What do we spend the most money on?
Oh, that would be simple. Everybody says our biggest expense is our home. Our biggest expense is this. Well, our home is our investment, not a big expense. Okay. Our biggest single expense we'll ever have in our life is taxes.
Oh.
We will pay more money in taxes. So that is the first focus we go at to try to do that. Just like with the client with the real estate, we tried to get in and get the real estate covered under the retirement plan because he wants to take income off the retirement plan. The only way to do it is to funnel the income, the asset, and have everything fully owned by the retirement plan.
Yeah, and most people think of everybody wants to minimize their tax burden, but most people think the way to do that is through just the accountant. They don't think in terms of a financial planner to help them in that area.
And the accountant has to reach out to the financial planner for advice. The accountant has to reach out to the tax credit company, get tax credits.
If they do. Yeah. I mean, how many of them do? They don't.
Because they're too busy. So,
or they may not even know about it.
Yeah. So, well, we're running short on time for this part, but I look forward to bringing this back to us every single week and talking about Stop Bleeding Cash. So if anybody wants to get more information, free book. Call
24
me.
hours.
24-hour window at the end of, when the midnight goes off on Wednesday, the free offer's off the table. And you have to go back to Amazon, you have to go back to Kindle and go get the book.
Right.
So call me, 619-295-5920, extension 22, and I will take care of it. Or text me. My cell phone is 619-549-5920. Very similar but different. Okay. Text me, call me, email me, bwaxler@barrywaxler.com, and I'll get it to you. So, great. This is Close Up on Sunday Business here on KCBQ, streaming live at am1170theanswer.com. Send us a tweet at CloseUpSD or just find us on Facebook. You can always email me at barrycloseupsandiego.com. Let me know what you think. I'm your host, Barry Waxler. We'll be right back after a word from our sponsors.
Taking care of business and working overtime.